Good morning, traders. My name is Adrian from BCR, and today I'll be bringing you the latest insights and key levels from the markets. The instruments we'll be looking at today are the dollar index, crude oil, and spot gold. Let's dive right in. First up, we've got the US dollar index. The US dollar index rebounded above 104 last week, marking its best performance in nearly 3 weeks, driven by geopolitical tensions. Despite a pullback in Treasury yields and the Federal Reserve's reaffirmation of its 2025 rate cut plans, the dollar managed to rise after hitting a low of 103.2 on Tuesday. The Fed's decision to keep interest rates unchanged and reiterate its forecast for 2.25 rate cuts this year bolstered confidence in the dollar, signaling less aggressive easing than anticipated. The market has begun to reduce short positions in the dollar ahead of the April 2nd tariff announcements, which could shift the market sentiment to neutral. The dollar is showing signs of a potential turnaround with prices nearing the recent consolidation highs. The 14-day RSI and MACD indicators suggest a weakening of a downward momentum supporting this potential upside. Looking ahead, the US dollar may continue to appreciate if trade policies disrupt global supply chains, but key resistance is near 104.77, with a break above signaling further gains. However, if the dollar falls below the 104 mark, it could drop to key support levels, including 103.2, with further downside potential towards 102.53. So up next, we've got crude oil. Crude oil prices remained stable last week, consolidating above the $66 mark before reaching a high of 68.57 per barrel, marking the highest point this month. The market is on a continued upward trajectory, supported by new US sanctions on Iran and ongoing geopolitical risks. The US Treasury imposed sanctions targeting Chinese entities involved in supplying Iranian crude oil to China is expected to reduce Iran's oil exports by 1 million barrels per day. And additionally, OPEC plans to cut production in 7 member countries until June 2026, further supporting oil prices. Geopolitical tensions, including military operations in Gaza and US airstrikes in Yemen, also contribute to the bullish sentiment. And on the technical side, oil prices are testing resistance at 68.57. That's the highs in March. And if this level is breached, prices could rise towards the psychological $70 mark and the 100-day moving average at 70.57, with further gains possible if it surpasses the 200-day moving averages at 72.57. The 14-day RSI is around 50, with the MACD showing balanced market forces. So the short-term trend remains unclear, and if prices dip below 67.02 and 66.07, they may retest support levels at 65.05 and 65, potentially signaling a bearish move at the end. So to wrap it up, we've got gold, and gold prices actually declined by 0.7% to around 3,000 before the weekend, and that was driven by a stronger dollar and profit taking. But however, gold rose for the third consecutive week, supported by geopolitical and economic uncertainties, along with the expectations of a Federal Reserve rate cut. Gold often is seen as a safe haven asset, and it benefits in times of instability and a low interest rate environment. And this year alone, it has hit 16 all-time highs with a peak of 57.5 per ounce. Geopolitical risks, especially in Gaza and Turkey, continue to drive market uncertainty, bolstering gold's appeal as a safe haven investment. Physical demand remains strong, and evidenced by Switzerland's export of 447.4 tons of gold to the US in February, indicating solid investor interest. On the technical side, gold is showing signs of being overbought as it hovers near its historical highs. The Bollinger Bands suggest increased volatility with a potential correction ahead. A breakout above 30.62 could push gold towards 30.80, while a drop below 3,000 might signal a bearish trend. Key support levels are at 29.87, 29.82, and 29.45, with resistance near 30.62 and 3100. That's all, traders. That rounds up today's market analysis. Thanks for tuning in. Don't forget to like, comment, share, and subscribe. Also, if you have any further questions, then don't hesitate to leave a comment below and I'd be happy to answer. As always, good luck with your trades. I'm Adrian from BCR, signing out.